Oh, and we'll talk about what is going to be happening. Tomorrow is the RBI monetary policy meet outcome that is there, and what is the expectation over there after the lowered the expectation for the GDP print, low GDP print that came in. Ritu is joining in with us to highlight what are we expecting now from the RBI policy. Ritu, good afternoon. What is the expectation this time, given that the GDP growth was lower than what one was seeing?
Well, Winnie, those GDP numbers have really put RBI in a very uncomfortable spot because, there is a growing clamor or growing chorus for a rate cut, including from government officials. You heard at the Global Leadership Summit for CNBC-TV18. And this is coming at a time when high inflation has breached RBI's tolerance threshold, and it continues to be a spot of bother. Now, our poll shows that 7 out of 10 economists do not expect the lower than expected GDP print to accelerate the rate cut cycle, and they believe that the primacy of inflation will prevail, at least for now. Now, the MPC is expected to leave the repo rate unchanged at 6.5% for the 11th consecutive policy. Why? Because there's lingering inflation concerns and also the volatility in global markets, because a rate cut at this point that could accentuate the pressure on the currency. So instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, and that could lay the foundation for a rate cut perhaps in the next meeting. In fact, an overwhelming 90% of our respondents now see the first rate cut from the MPC in the February meeting, and the total quantum of rate cuts that the economists are split between 50 to 75 basis points. Now, according to, while the rate cut is ruled out because of the inflation reigning above 6%, there could be an explicit acknowledgement from the RBI that growth needs support, and as a step towards eventual easing, the RBI may instead go for a cash reserve ratio cut. Now, the respondents are pretty divided again on the possibility of this happening. Some of them see about 25 to 50 basis points of a cut, which could ease some of the pressure on the banking system liquidity. Now, the GDP forecast, that is going to grab all the eyeballs. 70% of our respondents expect that the RBI will lower this projection by as much as 50 to 80 basis points to about 6.4 to 6.7. 20% see it being lowered even further, all the way down to 6 to 6.3%. Now, on the inflation front, about half the respondents are expecting that the MPC will revise its projection upwards to about 4.8 to 4.9%, some even to 4.6 to 4.7%, because of food inflation pressures still persisting. Now, apart from all of this, if you go to the next place to tell you, the RBI statement is expected to focus on liquidity management. So systemic liquidity that has been impacted because of increased forex interventions. The government cash balances have been volatile as well. So our respondents expect that RBI will continue to manage liquidity through both main and fine-tuning operations. But that is as far as the policy is concerned. The other big question mark for the markets and for all of us is the Reserve Bank of India Governor Shaktikanta Das's tenure. What happens to that? As of now, the current term ends on the 10th of December.
Okay, thank you so much for that, Ritu. We'll keep an eye out on the outcome that will be there tomorrow. So stay tuned in to CNBC TV18 for all those updates on the RBI monetary policy tomorrow. But let's move on, and Chief